we're all going to be more productive. Productivity is going to happen 3x, 5x, like you just said. Look at the profits. But at the expense of what? So if you imagine, Blake, you're a manager at a firm. You have 20 employees. You have 20 employees, you're human employees. You have 5 AI agents that are doing the work of another 20 humans. You're basically managing 40 people now. Coming to you weekly from the OnPay recording studio.
Welcome back to the Accounting Podcast, your weekly roundup of news in the accounting profession. I'm Blake Oliver.
I'm David Leary.
And David is back from Ireland. David, you took off a week, first week off in like 7 years. How did it feel?
It was good. It's interesting to not have to record, but I still prepared for the show. The news kept coming. Even news about me came. You actually broke that news for me and texted me.
Big news. Your former employer, Melio, is getting acquired by Xero for $2.5 billion. And we found that out as you were flying back from Ireland, getting delayed all sorts of times. I think you were awake for like 24 hours at one point.
About 30 hours to get home. Yeah, it was not fun.
So that must have felt good. I mean, because you bought your options. You got some stock in Melio, and it looks like you might do pretty well, right? I mean, how do you feel about this?
No, it's great. I mean, the acquisition makes a lot of sense. We've talked about this in the show before. The natural place to pay bills is in the accounting system. This is why Oracle NetSuite rolled out their own bill pay. We saw Sage Intacct roll out bill pay. QuickBooks obviously partnered with Bill.com, then they partnered with Melio, and now QuickBooks has built their own bill pay. Xero was the only GL without bill pay built in, and now they're going to have bill pay built in because of Melio.
That's the plan. They're
going
to
that full end-to-end because they bought HubDoc back in the past for scanning bills, because that's the other natural place. Like, you don't want to go to a separate website to pay your bills or scan your bills. You just want to do it in the accounting system.
That's the ideal. And that is what Xero is going to work toward. They say they're going to build Melio into the product. So you'll be able to pay your bills right in Xero, probably do a lot more, all the payment stuff. But they're also going to keep Melio as its own independent app. So users who are using Melio.com can keep doing that. And they've also committed to, this is important, keeping other payment services available in Xero. They're not going to pull an Intuit and block everyone else from putting their payment link on invoices, which that's what QuickBooks does, right? You have to use QuickBooks Payments if you want that payment link to work.
Yeah, they never had the option to specify a different payments provider the way Xero does. Yeah.
So more terms of the deal. It's actually a mix of cash and equity, the $2.5 billion. And we don't know exactly what that mix is, although we do know that Xero borrowed $1.2 billion as part of this deal, along with another $400 million unsecured facility. So seems like a good chunk of this, maybe half of this or more, is in cash. So that's good news for you, David. I guess, maybe, I don't know how they do this when they do these.
I've never experienced this before, so I don't know either.
You'll probably get some Xero stock, some cash. There's another $500 million that Xero will pay to Melio for performance milestones over 3 years. And I heard that the founders of Melio are getting $100 million each. Is that what you heard too?
I've not heard or read anything about that. I did see that it looks like Matan Bar, he's one of the founders, is now going to be the US vice president or US of America's president, like some role like that. I
don't know. High up in Xero somewhere. And I think it's worth mentioning that Melio is an Israeli startup. I mean, they've got a headquarters in New York, but like a ton of the work, a ton of the development, like the company is in Tel Aviv, right, David?
Yeah, and it was interesting because I think the Australian press and analysts are not like super keen on the deal. But then on the Israeli side, they love it because finally, like, Israeli tech's back, Israeli company had an exit. It's not the IPO because they always call it Startup Nation. It's not the IPO that they think they maybe wanted to have out of Tel Aviv, but it is an exit, and it's a good multiple for a tech company, and it's tech back, or tech acquisitions back. It's a bigger story.
I want to say congrats to Melio, congrats to Xero on making that big purchase, and especially congrats to you, David, because when you discovered Melio, and I view it as you discovering it because I didn't know about it when you went to work there, I was like, what is this company? Why is David going to this unknown Israeli payment startup when there's so many of them? But you saw something. You knew they were going to make it.
Well, I was in the hunt, and I can go back to when Bill.com launched on QuickBooks. I can go back to 2012, and I was still into it. And I remember I was trying to like whiteboard a workflow. Do you remember that company Shoeboxed?
Yeah.
You'd put all your receipts
Yeah.
in a blue envelope. It was like a Netflix envelope, a blue envelope. You'd mail it off. They scanned your receipts for you and then send you back nicely organized paper-clipped receipts back to you, right?
Yes, and you get a file with all your receipts or digital online storage with all your receipts organized, yeah.
And in theory, it put the bill into QuickBooks. And so I was trying to connect a workflow where you'd mail off your bills and your receipts, and then the bill would show back up in QuickBooks and somehow get to Bill.com and you'd pay it. I remember sitting in the room and I was just thinking, Bill.com could only ever get 2% of the QuickBooks base because it's way too expensive. And I always felt like if you could build a bill pay product that was better experience in the bank websites, because that's what everybody was doing at the time, but almost free or at the cost, like $5 a month, you could win 90% of the small business market. And I actually, going back to the very first QuickBooks Connect hackathon, I actually pushed the HubDoc guys to build this. They pitched it. There's a recording of it on YouTube somewhere. But they never, obviously they were trying to build HubDoc, didn't have time to pursue this, but they pitched like this free version of bill pay for businesses. Now, so when I discovered Melio, because it's essentially Venmo for small businesses, and I was like, oh, wow, this is amazing. Like, you have a chance to win it all.
Yes.
Because it's cheap and free.
It was like completely free. Is it still that way? Like what makes it different?
Now they have a paid tier. So they have a free tier, which I think is like $5 a month, which is the same as what's inside of QuickBooks. And I imagine once they get into Xero, it'll be the same type of model where there'll be a free tier and then a charge tier. But what made it really different than all the other bill pay was the credit cards. So you could pay a bill to a vendor. But if you think about like,
I could use my credit card to pay a vendor that doesn't accept credit cards.
Exactly.
And I would pay the fee.
Yeah. It's very similar to Venmo. Like if I pay you through Venmo, you don't care how I funded my Venmo, and I don't care what you do once you have it. And that's kind of that same thing. I can pay however I need to pay, and you can choose to be paid ACH, paper check, right? And so you've that freedom on both sides of the equation. But it makes so much sense because people don't want to go somewhere else to pay bills. It just doesn't make any sense.
And I would say the other thing that is underrated about Melio, but is what has allowed them to grow so fast, is the ease of use. They really have prioritized reducing the number of steps to pay a bill, to sign up, to start paying bills, to connect your accounts, to do all that. It's like the easiest possible setup. At least it was at the time when I tried it. And that's really important. Like you cannot understate how important that is and how many companies screw that up.
And I think it's still pretty easy to use now. They went upmarket a little bit, and so they had to add some, I'm going to use the word enterprise functionality. So some of the workflows have a little bit more fields than maybe you would like, but fundamentally, it's still pretty easy to use. You just jump in, you put who you're paying, you put their email address, and you pay.
So investors in Xero stockholders may not have liked how much Xero paid for Melio, but I am convinced that if Xero can deeply integrate Melio's functionality into Xero, they will really make Xero much more user-friendly for the US, and that's what they want to win. They want to win the US, you got to have payments in the app. This is the way they're going to do it. So,
and the other thing they get out of this, Xero does, is Melio has a lot of banking relationships. So they have a relationship with Capital One. They basically, Melio is like the small business bill pay part of Capital One if you have a business Capital One card. FiServe. So they own Clover cash registers, point of sales. They provide lots of services to banks. They provide a cash flow forecast tool of some type to banks for small business clients, and that is powered by Melio. So this opens the door to possibly new customers for Xero.
So David, I want to talk more about Xero because there's lots of Xero updates we haven't covered in previous weeks that have built up. We're also going to talk about QuickBooks and their new AI agents feature. And we got tons of news about AI agents in general. Big firms are adopting AI agents or spending like $1 billion on AI agents. These investments are crazy. Digits has AI agents. Ignition has some updates, got to cover that. The IRS might be using AI in audits soon. And there's a new VC-backed accounting roll-up. So that's all the app news I have. Oh, including an Anthropic survey about AI agents that features tax pros at the top of the list. In a good way, actually, or maybe a surprising way. So we're going to get to that. Hopefully we'll fit it all into this episode. We also got to talk about the PCAOB getting saved for now by the Senate parliamentarian. Thank you, Parliamentary Procedure, for saving the Public Company Accounting Oversight Board. And a whole lot more. Tariffs, the tax bill, whatever we can fit. First, though, we have to thank our sponsor for this episode, Cloud Accountant Staffing. Thank you, Cloud Accountant Staffing.
And Human at Scale.
Human at Scale as well. Thank you to Cloud Accountant Staffing and Human at Scale. Stay tuned for messages about those services. If you are looking for offshore talent to augment your team, that's Cloud Accountant Staffing. What does Human at Scale do, David?
Human at Scale helps you figure out, helps you attack your processes and your people so you don't have to be in the weeds as the firm owner, the business owner, et cetera.
Awesome. This is also the time of the episode where we would thank our live stream viewers. We are not streaming live this week because we had massive technical difficulties trying to get our live stream going. We tried twice, we tried thrice, couldn't do it. Who knows what's going on? The internet gods were not with us. So we're recording asynchronously and we're streaming out to you after the fact. So if that's why we're not seeing your messages, well, now you know that's why. All right, David, let's talk about other Xero news before we get into QuickBooks. Xero is reimagining their home screen. What they have called the dashboard in the past is getting a new look, a new feel. What do you think about this, David? What's your take?
My initial reaction was, the Xero user base is aging up. They're getting older. Because,
how do you know that?
I mean, like, historically speaking, there's a big divide, right? The Xero people were much younger than the average QuickBooks Pro advisor, like the Xero advisors. I mean, look at you. You were younger generation.
No longer, I no longer count as young anymore, but I guess when I started using it, yes.
So the biggest change I see, they have an animated image of the old UI and the new UI, and the fonts are just bigger. I can read it. And I was like, this is proof that the Xero user base is growing up and they have bad eyesight now and they have to have bigger fonts.
On the other hand, David, it might just be proof that the Xero interface hasn't changed in decades because resolutions on computer screens used to be lower. And so the interface would naturally appear larger on an older monitor. And now you have to like Command plus, Control plus to increase the font size on these new, high res monitors. That could be it too. We'll see how that looks. I mean, I guess it's nice that they're refreshing the look. What's funny to me is that pro advisors complain about QuickBooks changing the interface constantly. This is like every year, multiple times per year. They have many different types of interfaces, and Xero hasn't done it. I honestly, I don't think that the dashboard has changed since I started using Xero, which we're coming up on like 20 years now, 15 years. It hasn't changed. That's
because it never
incredible.
had that Web 2.0 feel of the rounded corners, slightly bigger fonts. It just kind of had a web feel. It never had that new modern feel. Now it's clean and modern. There's rounded corners. The widgets look like you'd expect a modern app and widgets to look like. It's a good improvement.
Now, other than just look and feel, what's going to be there that's different? What information is going to be different? There's going to be a task list that will help prioritize actions like outstanding invoices and bills. There will be a widget for recently paid invoices, a widget for net profit and loss, a widget for an enhanced, well, they already have this, the chart of accounts watch list, but now it will be enhanced with budget tracking information if you're using the budgeting in there. So that's going to be rolling out to Xero users gradually. Beta participants get access soon, if not already. And then the full rollout is planned for later this year after beta feedback collection. What else is new with Xero? Now, US customers can collect payments from iPhones with tap to pay. Tap to pay on iPhone functionality for US customers who have Stripe accounts is now functional. No additional hardware required if you're using an iPhone. This works on iPhone XS or later with the Xero accounting app. And I guess your customers can just tap their iPhone to your phone and use Apple Pay and pay you
Now you
without
don't
a
need
dongle.
the dongle stuff anymore.
Yep. Xero and Tally4 are integrating. This is a new partnership with Tally4, the tax prep. What would you call them? They're like what they started as was like trial balance adjustment software, right? Like, so pull in your data from Xero, adjust it, and then export it into your tax software. Do all the mapping.
But you're constantly doing it every month. So at the end of the year, you're not scrambling to have closed books, right? Is that kind of the purpose of those?
It's a live mapping into the tax software. And then once you do the mapping, everything just flows through. So really streamlines that work that you would do in Excel. And so basically you're going to be able to pull Xero data into Tally4 with just a few clicks. No more exporting to like a CSV or a report and then pulling into Tally4. That's all I've got.
I had something else on Xero.
Oh, what else is new with Xero?
So Xero is launching a series of no-code development videos. So they have their Xero developers. So somebody who knows how to write code, they can integrate with the Xero API. But for a lot of accountants, we have to use no code. I can't code, but I can use no code tools. So they're going to have a series of YouTube videos that are coming out. They're launching. The title of the video series is called Xero Automation Unleashed, AI-powered workflows for your business. And they're going to cover tools like Replit, Lovable, Solar, Cursor, Claude Code, Windsurf, OpenAI Codex. So allow you to learn to build things and connect to the Xero APIs and access that Xero data. So it's just probably a good Xero video series that's going to help the audience, right? Which is accountants, I feel like, are the biggest no-coder population, because you kind of know how to write code because you can create spreadsheets. You just need a tool.
Where do you access those videos?
On YouTube. They also have a blog post we'll have in the show notes, but it's on YouTube. The very first 3-minute video giving the overview is on YouTube already.
What do you search for if you want to go find it on YouTube?
I would search for Xero Automation Unleashed.
And it turns out I have a bit more Xero news that was buried at the bottom of my list. Constant Contact and Xero are partnering. There's another partnership for you. It's going to allow for automated contact syncing from Constant Contact into Xero contacts. Or I guess the other way around, from Xero into Constant Contact. So then you can create email campaigns. And Xero customers will gain access to Constant Contact's full suite of digital marketing features, including AI-powered email, SMS, social media tools, and event management. So basically contact syncing from Xero to Constant Contact, which makes me think of Intuit's deal to buy MailChimp. Yeah. That's why this is happening, right? Xero is playing a little bit of catch up here. Xero has also partnered with Carbon to streamline workflow. Carbon, the practice management software. What is going to be enabled by this partnership? I actually can't really tell. Oh, here it is. Real-time exchange of client billing and payment data between systems. So if you are on Carbon and you are using Xero, enjoy that new partnership there. All right, that's all I got for Xero news. David, let's talk about QuickBooks and AI agents. We have talked about this on the show in the past, but I think it bears repeating because Intuit's CEO says this is one of the most important product releases they have ever done in the history of the company. Is that right?
Yeah. So there was an interview in Fortune.com, and Intuit CEO Sasan Goodarzi said that this is a quote unquote, the most significant launch we've ever had in our history. And he's referring to the AI agents that come out tomorrow. When's the first? 2 days from now? It's soon. By the time you listen to this or watch it, the AI agents might be doing your work for you. So you could tune into all the future live streams. I don't know. I kind of question that because the launch of QuickBooks probably is the most significant because they built it was Quicken, they bought TurboTax. QuickBooks was actually built, right? That was actually a launch. Outside of that, there hasn't been any other launches. They acquired Mint for personal finances. They, what else did they launch recently? Oh, they acquired MailChimp. All the other products are acquisitions. Like there
Oh,
is no launch.
Enterprise Suite, Intuit
I think
Enterprise Suite.
Enterprise was a huge launch. That was a big launch.
Right.
But even
Well,
that is just QuickBooks. I
well,
mean,
it's
at the end of the
QuickBooks consolidated, right?
day.
Consolidated QuickBooks linked together. Okay, so these AI agents, we've talked about this on the show before, but for the listeners who missed it, I want to highlight what they are going to be doing. There are 4 different types of agents.
So one is to spot, it's a customer-focused one. So spotting leads in emails, drafting emails, tracking interactions all the way to the point of sale. They have another one for payments to streamline and speed up that process. They have one for finance to help analyze and help boost the health of your business. And then the fourth one is for accounting to reconcile expenses and quote unquote make your bookkeepers happy. And then he goes on to say that it's not just about workflows, it's about a business feed that does everything for the customer while they're still in control. And it's not just about technology, it's also about the human expertise because in our world, even millennials, they want the reassurance of a human. But I don't know, my 2 cents are like, where are the accounting agents? Like really the most basic thing you can do with AI is write emails. like this is what we're getting. So the accounting company is rolling out agents that don't do accounting. What's the accounting work?
The work is supposedly transaction categorization, reconciliations, and anomaly detection. But what that actually means in practice when you're using QuickBooks is something we're going to have to discover because QuickBooks already does transaction categorization. So what does it mean for an AI agent to be doing that? Does it mean I'm no longer going to have to click to accept it? It'll just automatically enter transactions if it reaches a certain confidence. But what is that confidence? How is that measured? How do I define that? How does it work with me to decide what it enters and what it doesn't? And when it comes to reconciliations, what does that mean? Does that mean it's going to automatically reconcile my bank accounts for me? How's it going to do that without a bank statement?
Am I going to have to go there? I don't have to go to the bank feeds screen every day and match transactions. It's not really clear, but this is what's great. This is launching. We'll talk about digits. They're launching AI agents. I think in about 60 days, we're going to know where we really stand with all these AI agents and how it's going to affect accounting and bookkeeping.
Well, you've been gone for a couple of weeks, David, so I'm sure you've got a lot of accounting cleanup work to do, catch-up work. You could use these AI agents potentially to see how well that goes. You know, can these agents really help with the accounting stuff? That's what I want to know. The marketing, I get. The, customer agent, like you said, email drafting, yes, duh. We all know that it can do that. Scheduling meetings, sure, I suppose. But
the email one, is not impressive. Who cares? Really, do you need a custom created email every time somebody has an overdue invoice? What's wrong with the same template email you sent? You have an overdue invoice number with mail merged invoice number and sent it out that folks have been using for 25 years.
Here's my question about that. Let's just talk about invoice follow-ups. Will the AI agent just proactively every day surface the invoices that need to be followed up on and then do it automatically? Or will it just be something where I have to take initiative to do it and I talk to it and then it does tasks in QuickBooks? That's very different to me.
Well, it's drafting the emails up, right? Is part of it's saying, I've prepared these overdue emails. Would you like to send them?
Can it send them itself?
I think
that's to me, that's what an AI agent would,
if I gave up control, I guess, if something like that. But here's where I'm really not impressed with this. I have another article about David's Bridals.
Okay.
So David's Bridals, the wedding dress company, right?
Yeah.
And their CEO is talking about 100% of their emails are AI generated now. So basically, we have the accounting technology company delivering the exact same thing the wedding dress company built themselves, probably in-house. It's just, I'm not impressed with, this is not accounting jobs being done with AI agents.
Not yet. I think there's a huge overselling of this term AI agents right now. Because if it's just like an enhanced chatbot where I chat with it, it has access via the API behind the scenes to do various stuff in the software, but I ultimately still have to chat with it and tell it what to do. All it's doing is taking away that previous step where I had to go click buttons. Now I'm chatting instead. And that could actually be less helpful. That could actually be more difficult. If it doesn't do it correctly, the first time I have to go then fix it. I mean, if I could just chat with it, tell it to make an invoice, sure, that could be helpful. And it just asks me questions until it's got all the information it needs to go make the invoice. Yes, that could be good. But
Right. So Stanford and MIT had a study, and they came out and are saying that AI is handling repetitive tasks and freeing accountants to focus on higher value work. So they're saying that accountants using generative AI can close the books faster, serve more clients, produce more detailed reports without sacrificing quality. They are saying, so this is Stanford and MIT are saying this. I don't know any firm owners that are doing this because I can't use AI in my thing. It just sends emails. I can only create overdue emails. Like I don't see AI doing anything else. It says accountants using AI finalize monthly reports 7.5 days faster and spend 8.5% less time on routine tasks. Firms saw a 12% increase in report detail granularity when using AI. This is what tells me accountants aren't using AI. 62% accountants, based on their study, worry about AI-generated errors. That seems too low. So 40% of accountants are using AI and just not worried about any errors. They're not using it. They're not using it.
The question is like, is this all theoretical? Is this real world stuff? Like, who are they serving? Are these big companies? Are these small companies? I don't know. But I mean, here, I'll give you an example of something that we did from like an analytics perspective recently. I took all of our episodes since we moved to our new podcast host, which is years ago, like 5 years of episodes. And I took the 7-day downloads and the titles, and I had a report in the browser looking at our show. I copied and pasted the whole thing into ChatGPT, and I said, do an analysis. I want year-over-year comparisons because our show is seasonal, because accounting is seasonal. We have different numbers depending on the month. I said, give me a month-over-month comparison of these 7-day downloads. And it took all the data that I just copied and pasted, it organized it into a table, and then it analyzed it, and it did the month-over-month analysis showing the percentage change from 2024 to 2025 for every month. And it adjusted for the number of episodes that we released, and it did averages. I mean, it did a very sophisticated analysis that would have taken hours. And then I asked it, okay, go a step further. Look at the titles and tell me, what topics do people like the most? What is engaging? And it gave me a list of keywords and topics and compared them to the average downloads per episode and told us what we should be focusing on based on that information. You know, that's really cool. Like if you're doing a bunch of Excel analysis like that somehow in your company, then AI crushes it when it comes to that kind of work. And if you're not trying that, I would highly suggest doing it if you can get a subscription and get your company to approve it.
And this is where I think there's a huge disconnect happening. There's this messaging, or even this study from Stanford and MIT, that it's the boring work is being done by AI and AI agents. I don't see that happening. I see the use of AI as like, all this data here is correct. Go look at it, digest it, process it, give me an output, like you did with the stats about the downloads for the show.
Yeah. I think it depends on how big the company is, David. And I think that's why you're not seeing it, is because a lot of this stuff is happening in like Fortune 500 companies where they have the internal resources to like automate this stuff with the ERP system, and they are just processing massive amounts of transactions. And so it makes sense to use AI to automate that. That's my guess.
If you have millions of transactions and you move the needle a little bit, you see your benefit. Yeah.
But when it comes to small businesses, and most of the accountants listening to the show are working with small and mid-sized businesses because that's most of our economy. When it's half the economy, and it's most of the accountants, right? It's most of the people, most of the employees. Like that, we don't have that yet. That is not happening yet. I guess it's starting to. We're going to see what happens with QuickBooks, and that's why this is such a big announcement potentially. Yeah. So, David, let's talk about Digit's AI agents. You mentioned this. QuickBooks has their AI agents. What's going on with Digits?
And now Digits is launching their agents that's built on top of they call it their autonomous general ledger. And so they launched their agents, all built on their existing tech stack. But what caught my eye about this, and this is where I think we're really going to see the benefit of these AI agents. So one of their partners they work with, which is a firm called Highline. I think you know the firm, maybe. You've heard of the firm?
Yeah.
So they praised this agent as they called it, quote unquote, the 24/7 junior staff accountant. Like, this is the dream accounting partners have wanted, and firm owners. They want the employee that can work 24 hours a day. And that's where agents are going to be interesting. They're going to just be working all the time doing stuff. And that's what's interesting. So even if it does things wrong, it's the volume of work it's doing that you could overcome what it does wrong.
And for those who don't know digits, one of the things it does is pulls out all the detailed transactions from QuickBooks, modifies them, and pushes them back into QuickBooks. So using AI agents to, say, do the bookkeeping, to categorize the transactions, is something that like Digits is well positioned to do. They also analyze the data and produce reports. So Digits conducted a study, this is according to Digits, comparing their bookkeeping agent against 12 human outsourced accountants across 2,000 real transactions. And they claim that their agents achieved 97.8% accuracy versus humans at the humans had 79.1% accuracy. So the AI agents made 10 times fewer mistakes, and they did it at less than 1 second per transaction versus half a minute for the humans.
Am I reading this correctly that they're claiming 8,500 times faster?
Yes, I read this? 8,500 times faster, because it's 0.04 seconds per transaction versus 34 seconds per human transaction. And the cost, $100 for the Digits AI versus $40 per hour for humans. So 24 times lower cost. So more accurate, way, way faster, and significantly lower cost. So they've got a bookkeeping agent that they've launched that categorizes, matches, and cleans up transactions. Humans only approve exceptions. This actually sounds very much like what QuickBooks is building or has built. They also have a finance agent that streams live data into always current dashboards and surfaces trends automatically. And then they have a reporting agent that drafts interactive reports complete with charts and insights ready to share. Now, the reporting agent sounds very much like what you can do today with these chat bots, where you take financial information, reports, and dump it in and get a narrative. That seems totally doable. I believe that. The finance agent, I'm curious about what that means more, but like QuickBooks, their finance agent is like doing cash flow analysis, trend analysis, looking for stuff. My one criticism about using this for analysis, using AI agents in the accounting system for analysis or for finance or for CFO type stuff, is like, it just doesn't have enough information to do that job. If all you have is the accounting information, you're missing a huge piece. You don't have operational data. You probably don't have payroll data. It'll just hallucinate
the rest. It'll just get all that. But,
right.
And that goes back to when we were at Sage Intacct. The bell went off for me is at the Sage Future Conference is maybe you don't want your accounting agent, trained on every single thing in the world. You just want them trained on accounting data, or your accounting data specifically.
So we've got more AI agent news. The big firms have been making big announcements when it comes to agentic AI or AI agents. RSM, they announced a $1 billion agentic AI investment, as reported by Accounting Today. They're a top 10 accounting firm. They are going to target this $1 billion into embedding agentic AI into assurance, tax, and consulting. They're going to provide AI tools to boost productivity and professional development, and they are going to develop AI solutions to improve service delivery. They're developing what they call AI flows, purpose-built workflows that allow professionals to leverage AI agents and generative AI capabilities within their existing work processes. I always wonder about these billion-dollar announcements. Like, does this mean they're spending cash to do this? Does this mean they're giving everybody an hour on their timesheet every week to do this? You know what I mean? It's sort of like the Melio purchase, where it's like a mix of stock and cash and equity. Like, what is it really?
I imagine it's not real spend. I think it's some real spend, but it's really probably just time and or company resources on the whole they're investing into this. Right?
KPMG has launched their multi-agent AI platform called Workbench. Workbench. So what do I mean by multi-agent AI platform? It means that you can create these agents, think of them like AI chatbots, give them instruction sets, and then allow them to communicate with other people in your organization and with each other. And by building a network of these agents that can work with each other, you can really increase what they're capable of doing. And so KPMG is saying that they have currently a network of 50 AI agents that are operational, with nearly 1,000 more in development, and they will work as, quote, digital teammates, unquote, alongside KPMG professionals. It's built on Microsoft Azure infrastructure with these agent-to-agent coordination capabilities, and it integrates with their existing platforms for tax, advisory, and audit. And if they can do this, if they can integrate their audit and their tax and their advisory data with these AI agents and basically get the agents doing a lot of the work that people would be doing, I mean, the profits could be astronomical.
So that's something I saw in an article that was the title of the article basically is cognitive load will grow due to AI usage. And we're all going to be more productive. Productivity is going to happen 3x, 5x, like you just said. Look at the profits. But at the expense of what? So if you imagine, Blake, you're a manager at a firm. You have 20 employees. You have 20 employees, you're human employees. You have 5 AI agents that are doing the work of another 20 humans. You're basically managing 40 people now.
Or, I mean, it could rapidly expand to hundreds of agents or people, or a combination of people and agents. Yeah, I could see that.
Yeah. I saw a funny tweet related to this. Managing your AI agents is like managing your offshore contractors. You wake up in the morning, the work is 80% done, and everyone has a question. And you have a lot. You're gonna have all this extra work to do, because like if a decent human employee, I could ask them to do something, they go off, they do it, and I trust like they're owning the execution of it. And you can't. AI agents don't take ownership to get things to the finish line, right? And that's going to be
they're not conscious, right? They can't.
So it's still on your plate. So now you're doing 8x the work you ever did in your whole entire life, 20x the work. But it never actually gets out of your brain. You're never taking it off your plate fully.
Yeah.
Kind of.
No, I see where you're going with this, David. So the phrase you used was cognitive load. Is that right?
Correct.
Cognitive load. So the load on my brain, the amount of stuff that I can remember, that I can think about in a given day is limited. And it's not limited by the time I have in the day. It's limited by my mental energy. No matter how much time you or I have in a day, there's only so many things that we can think about, and think about well, and not just in passing. And I think a great example of this is the limit on the number of students a teacher can have. There have been many studies that find that a teacher in a classroom, they have an upper limit on the number of students that they can have a relationship with, that they can think about every day, that they can focus on. And it's like 20 to 30. More than that, and the students start to lose connection with the teacher. The teacher can't really keep tabs on all of them. And so it's kind of the same thing when it comes to all this AI stuff. I think you're right. It's like we assume that because we can automate all this work that we're going to be way, 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 way more productive, that it scales up linearly, right? That the managers of these AI agents will be able to handle it. But I don't know about that.
I mean, we tend to be humans. We're going to find more work to do, right? We're not going to, I'll just work 3 hours a week now because I have those AI agents doing all this work. I don't think that's going to be the case.
Why not? I've got a story about that.
We're still going to work 80 hours a week. And Microsoft just recently came out with something with this term. Have you heard the term infinite workdays?
Oh, that sounds dystopian. What does that mean?
Maybe essentially it's accounting firm culture a little bit, right?
Yeah.
Nonstop notifications, nonstop emails, late night work, blurred boundaries between job and life, right? And Microsoft's saying, guess what? AI is not going to help with this. It's not going to solve this. Essentially, the takeaway here is the modern workday is broken. And unless people can organizations can overhaul workflows, AI is just going to help us burn out faster. And we just talked about that with the
Right, because now we have even more stuff to think about, but we don't have the brain space to think about it all, no matter how much time we have in the day.
Yeah.
So we have to think about these assumptions. And this is the problem in accounting, is when you think of everything as based on units of time, you don't account for the brain space problem. And if you think about it, let's just do a thought experiment here. Maybe like the root problem of audit, and the reason that audit quality is because the managers and the directors and the partners are overwhelmed. They have too many things to think about. And so if you automate all the routine work with AI, it doesn't solve that problem. It just makes it worse even, because now they have even more stuff to review.
Yeah,
Now,
because if I go to a meeting and I pay attention to the meeting and I take 3 sentences of notes, 2 action items are for me, I'm done. No, instead now I get an email after the meeting with notes about 10,000 things I don't care about that I have to digest to find my one to-do that's in there. Like we're already feeling this. Every meeting you go to, I get a Fireflies, I get a Zoom summary, a Google, I get 5 summaries of every meeting. This is insane.
yeah. I don't know. I don't know how we solve that. Here's how you solve it. This is what
I need an AI agent to review all my other
exactly.
crap.
So this is where the AI agents talking to each other could potentially solve this. Is because humans can't review all the work the AIs are doing, you now have to build AIs that review the work of the preparers. And this is the classic accounting workflow: is somebody prepares work, somebody does a work paper, somebody prepares a return, and then a senior or a manager reviews it. And then they flag all the issues, they kick it back down to the staff. In an ideal world, they kick it back down. They don't fix it themselves. They tell that staff accountant what they did wrong, and they fix it. And then it comes back for review. And then once it's acceptable, it goes through to the next layer. Could you build that with a network of AI agents? Could you have preparer agents and reviewer agents? And could you then get them reliable enough where you could replace the human review for 90% of the work? I think theoretically, yes, this can be done, but will it be done properly in practice? Or will this stuff just be rubber stamped by AI, and then the humans at the end of the hose just like are overwhelmed and can't actually look at any of this stuff? And so quality then goes out the window. I don't know. I mean, that's the question. It could get really good. We could improve audit quality. We could improve tax return quality. We could improve financial reporting quality, or it could just go all to shit. It's sort of one way or the other, depending on how you do it.
The good news is, obviously, with all these AI agents finally getting into people's hands over the next 2.5, 3 months, we're going to start seeing good data about this. But there was already indication that AI spending might be slowing down at some companies. So Ramp's a spend card, corporate spend. So they get to see what people are spending their money on. So as AI grew, they were able to track all the new spending that's happening with all the AI companies. Well, it's kind of plateaued and flattened out now. It's actually decreased a little bit. So anybody that's going to buy AI stuff has already bought it. Until there's a new wave of an improvement, then it's probably not going to be new adoption. So we'll see if things decrease or move up with all this. We're going to find out in the next 3 months, because these agents are here now. It's not promised. They're here.
I'll tell you what is going to get people to buy it in the big market. Okay, I would buy today, I would pay a lot of money for an app that allows me to build agentic AI workflows where I can create multiple AI agents and I can give them jobs and they talk to each other and they attempt to complete a task as a team. I've been looking into this. I think there's some stuff that I'm going to check out that might be ready. Microsoft Copilot now has this built-in. Copilot Studio just announced that you are going to be able to build multi-agent workflows. I might check that out. I've been a Google Apps user for a long time. Maybe Google has something. Like, that is what I would spend money on beyond, ChatGPT, Perplexity, Claude, all this stuff I'm already paying for. So, and that's what the big four are investing in. That's what they seem to be building. That's what KPMG is building there. So I mentioned the Copilot Studio thing. That was in their May announcements. So yeah, you can now, agents can actually delegate to each other. So I would be really curious to see, could I build like an accounting firm of AI agents that does like simple tax returns as an experiment? I bet it could be done at this point. And
I'm
then
sure there's somebody trying to build that as we speak
right?
already. Yeah.
So all that review, all that stuff where it's just, you're just looking for the same thing every time. It's like the same mistakes happen over and over and over again. So, if you can just find just do 1040s that way. See if you can get AI agents to do a bunch of 1040s like people would do. I mean, how trained is the workforce at an H&R Block, really, David? How much do they actually learn before they start giving them returns to do? I bet you we could train some AI agents that could do much higher quality work than like an H&R Block entry-level employee doing returns, who's taken how many hours of training do they even get? It's probably not that
much. A couple evenings here and there.
Okay, David, we got to blast through because we got way more.
Yeah, we have a lot.
I mentioned Big Four, so I'm going to finish out my stories here. PwC. CFO.com reported how PwC's tax team is using agentic AI. I think actually Adam Zaki last week mentioned this when he was guest co-hosting, but we didn't get into the details. And I wanted to highlight one of the ways that PwC is using AI agents in their tax function. And the example that I really like is K1 data mapping. How did people do it in the past? How do people do it now? Teams of humans huddle around cubicles to interpret complex K1 footnotes and map deductible expenses. What's the new way? AI agents trained on expense treatments can assess K1 footnotes, determine deductibility, and map items with confidence levels. When confidence is below 100%, humans review and provide feedback, teaching the agent for future scenarios. This seems totally realistic, totally doable, something that if you had enough K1 footnotes, examples, and you had outcomes, and you had, the human explanation for what should be done, if you train an AI on a bunch of those, you could totally automate this. So that's one of the examples. Okay, that's all the Big Four stuff I've got.
All AI Big Four stuff? Because I think there's other Big Four news that's out there.
Well, we got some PCAOB news, and I want to make sure we get to that. We cannot forget, but we still got too much app stuff to get through, David. So do you mind if I just churn through some of this news here?
Through. If it's bothering you, churn through.
Okay, so let's talk about Ignition. Ignition, the proposal management app, has announced AI-powered pricing intelligence features. So what does this mean? It means that, and we were there, I was there actually. Sorry, you weren't there, David, but I was at AICP Engage when this was announced. What it means is that if you create a proposal in Ignition, you will get AI-based feedback on if your pricing is too low, just right, or too high. And the way Ignition is going to do that is they are going to take these service items that are where you have descriptions of the services and you have the price and you have the title, and they're going to compare those across their entire user base, all the companies using Ignition, and then tell you if you are priced correctly or give you some insight as to whether you're underpriced for, say, a particular service that you have put into a proposal before you send it so that you could then potentially change it. Now, I think that has a lot of potential because pricing is one of my favorite things to use AI for. I would not send a proposal for anything that is bespoke without running it by AI at this point.
It's interesting because I think there's pushback on some of these apps and companies that are helping people figure out what they should charge for rent. So basically all the landlords are utilizing the same database to try to...
Which can actually...
It's not price fix, but kind of in a way it is price fixing.
Well, there's a big lawsuit against some of these rental apps, rental management apps, property management apps in the past because that's what they were doing is they were giving that information to their users, which can be a form of price fixing and can be illegal in certain areas. My hesitation with this, or I guess the thing that makes me think this might not work so well, is the same reason why AI agents will have a hard time delivering CFO type insights based on accounting information when they don't have operational data, when they don't have data that's outside of the accounting system. So Ignition only has a limited set of information. They have descriptions and they have prices. They are also going to have to pull in information outside of that in order to deliver information on or insights as to whether the price is correct. And they are going to do that for some things. They've already said they're going to pull in industry type. They're going to pull in the billing type and frequency and geographic region. And I think that's important because the amount you can charge for a tax return in Los Angeles, California, is very different than the price you can charge for a tax return in, I don't know,
But this is horrible because
Nebraska.
we've already seen these surveys where people are undercharging. So what's going to happen is you're going to get feedback that says you're charging too much. You're way above the average, right?
Right, because what if the whole industry is underpriced? That's a good point, David.
We've already had those survey data. We've covered this in the show in the past, these survey data that shows what people are charging, and it's like ridiculously low.
Very good point. So, right, and this is the thing about AI is that because it's trained on all the information out there, it can be very average, very mediocre. So if you use what the AI gives you, you are accepting an average result. If you want above average or superior pricing, maybe you have to ignore what you're getting from the collective unconscious.
Yeah.
Ignition also has launched AutoCollect to help small businesses wipe out late payments. AutoCollect integrates with your accounting software to streamline payment collection. It automatically imports unpaid invoices from QuickBooks Online and Xero into Ignition, and then allows businesses to invite clients in bulk to pay via an online portal. So pulling your invoices from the accounting system into Ignition and then send them out to clients. It's sort of the opposite of what you normally do.
That doesn't make sense because I guess this would be if I'm a migrator, I've not been using Ignition yet. This could make a lot of sense. But if I'm already using Ignition, in theory, I have no overdue invoices because I made everybody agree to their contract and put in their payment information. I'm billing them immediately.
Well, so I like it because there's always situations where you did something and you didn't use Ignition to do it. And then creating the whole proposal just to get paid is silly. So this way you can just create the invoices in your accounting system and still pull them into Ignition to get paid. So you're getting paid in one place for all the stuff you're billing in Ignition and all the stuff you're not. So a great example of this is an accounting firm has a CAS team, an accounting services team, and they're using Ignition to do all their monthly recurring billing. But you still got a tax team over here that isn't. They're not on Ignition. They're using, whatever they're using, right? And so those invoices are getting imported into QuickBooks Online, and then, well, you still need to get paid, right, by the clients. Well, now you can pull them all into Ignition and send them out. So I think that's brilliant, actually, in terms of getting like wider adoption of Ignition in accounting firms across teams, where some teams may not want to or be able to use Ignition to send the proposals. Okay. Multiplier, founded by ex-Stripe exec, naps $27.5 million to fuel AI-powered accounting roll-ups. I spotted this in TechCrunch, and I thought, wow, that's pretty relevant to our podcast. Noah Pepper is a former Stripe executive, and he's raised $27.5 million, and he's doing a roll-up of accounting firms funded by VCs. I'm losing track of my acronyms, David.
Yeah.
Funded by VCs instead of private equity this time, and leveraging AI. So Multiplier was actually originally a software company. They were selling software to tax accountants. But then ChatGPT came out and he realized the real opportunity wasn't selling SaaS tools, but making accountants dramatically more effective. And so now he's acquiring existing firms, small firms, and integrating AI into those firms, and he's rolling them up. And
this is what I talked about last week or 2 weeks ago with Crete. With Crete professionals.
Yeah.
That's the business model. Buy accounting firms, make them buy the AI.
So they recently acquired a firm called Citrin International Tax. It's a 12-person boutique cross-border tax accounting firm. And they say that AI tools helped Citrin more than double its profit margins by eliminating manual work. So that's the idea. Buy small firms, put in the tech, double the productivity, and there you go. It pays for the acquisition all by itself. So this is interesting because this is way smaller than the types of deals you see in private equity, where to get that, you got to grow to like, I got to be a 50-person firm, a 100-person firm. But now I might be able to grow a 12-person firm and then get a nice
Sell it.
buyout. So I can see this is where things are going to go because there aren't going to be that many 50 or 100-person firms once they all get bought by private equity, right? So if you're thinking ahead here, maybe the best thing you could do is start a firm now, grow it to like 12 people and sell it in like 2 to 3 years. And you might
if
be
you
able
don't
to
sell it to this VC company, other firms will gobble you up because they want 12, they want your 12-person firm as well.
That's right. And, professional services is a giant industry. But I don't know if you can even call it an industry, right? It's just a giant like segment of our economy. And so much of it is done in a very inefficient way. And so, yeah, if you can just figure out how to apply AI to increase productivity, you can buy them all day long and essentially just pull money out of them. Just as long as you can keep the people. That's the problem, right? Is like that's where they slow down, and it's because they implement all this AI. People don't like it. They leave, and then the firm is unable to grow. And they lose clients, that sort of thing. So it really is all how you do it. But I mean, it's the same thing we've seen before, where you take a traditional accounting firm and you apply cloud-based accounting automation. What happens? Productivity goes way up, profits go way up. We've been seeing this story in client accounting services and firms.
The difference with that, though, it was accountants and bookkeepers and people in the industry doing these transformations.
Mm-hmm.
Now it's outside people coming in and changing the industry. And that's the difference of what for the cloud accounting was driven by cloud accounting and by accountants and bookkeepers and forward-thinking cloud accountants. But now it's being driven by cash, really, ultimately, at the end of the day. And this goes to that argument when I was talking about the Crete Professional Alliance and the Red Lobster analogy. They're going to force you to buy their shrimp, right? Because you own the shrimp company as well. And the argument that a lot of people had, I put a LinkedIn post and a tweet about this, is over and over again, I keep getting educated. I'm using air quotes here for those listening. Educated on there are laws and regulations preventing these things from happening to CPA firms. That you can't use the verb of the CPA. So I don't know if you saw this week, Tesla delivered its fully driverless delivery of a new car. So somebody bought a car and the car left the factory and just drove to their apartment. And that's how they bought the car. And the reason I think this story is important because it's not about what the driverless car. That's not the story here. The story here is that car dealerships basically were saying the same thing about Tesla 10 years ago because many states have protectionist dealership laws. For example, Texas prohibits automakers from selling vehicles directly to buyers. So what Tesla has to do is they can't have a showroom and finalize a purchase on site. They have to do a website, right, and buy it through the website. And now so basically what Tesla did, they've gone through some legal battles to get some things changed, but really they just bypassed the whole entire system. And why I think this is important for we have CPA protectionist laws. Right?
Well,
and people think that's going to save them from PE changing what an accounting firm is. And I don't think that's true. I think you're very naive to think that. They're going to first start by telling you can't put CPA on your LinkedIn page, or they're going to create a firm whose initials happen to be CPA, like Crete Professional Alliance. Like people need to don't be so naive that these laws to protect CPAs are going to save you and your firm. And what is an accounting firm? And who has control over the accounting firm? Huh. These laws of like, only CPAs are going to control the firm probably aren't going to be around. People are going to figure out ways around it, just like you can buy a Tesla and it just shows up at your door. They're going to bypass the entire law of the system.
So Tesla was getting blocked by all these laws that protect dealerships.
Yeah, it's like a partnership thing.
Yeah,
like you have to be involved.
You have to sell a car through a dealership. The dealership people got these laws passed in all these states to protect their business. It's protectionist.
Yes.
To prevent car manufacturers from selling directly. And so you're saying Tesla just bypassed the whole dealership
And now it's the
system.
full bypass has happened now.
Right.
Right.
Because
order online, the car drives itself to you.
there's no
They bypassed everything.
dealership. Yeah. And they got around the laws that way. And you're saying that basically private equity is going to figure out how to do that with accounting, that the laws that we have to protect us as CPAs will get bypassed because creative people will figure out how to bypass them. And we've already seen that with alternative practice structures. I mean, that's how you get around the rules about CPA firm ownership and independence
this is how
rules.
you have a letter of Dark Horse.
That's
Aren't you an owner of Dark Horse because of this?
Yeah, I mean, I'm a shareholder in Dark Horse CPAs just to get around this requirement that your firm has to have the name of an owner in it, or the exception is you can use initials, right? So I'm the O in Dark Horse, and there's an owner, a shareholder for every single letter in the word phrase Dark Horse CPAs. But like that's just a small example of something stupid that doesn't really protect the public. That's just an antiquated thing that still exists from when, accounting firms couldn't advertise. Like people forget that accounting firms until like the 70s, I think, or 80s couldn't advertise. You could not advertise your services. And so, yeah, I think I agree with you, David. Like private equity will figure out how to get around all these rules. And unless the regulators sort of like wake up and think about deeply about what does it mean for CPAs to protect the public, how do we actually protect the public, and they stop just making rules to make rules, and they start thinking about their purpose, it's going to happen. It's already happening, and so the CPA will get sidelined if we don't do something.
So I know you said the word rules, so I'm going to bring up another story here. One of the things you always bag on, Blake, is you're always like, lease accounting standard. Well, how has that helped anybody? You go off on this all the time about lease accounting standards not helping anybody. Well, what if I have an example of how an accounting standard is actually disincentivizing stores from lowering prices to consumers?
Really? What would that be?
So there's a working paper by UCLA Anderson's Zitong Zhang is a PhD student. Essentially, the accounting standards codification of 606. So it used to be 605 and it changed to 606.
And that's revenue recognition.
Revenue recognition for discounts. So previously, the way this worked is let's say a bag of potato chips, right? You're the store, I'm the manufacturer. Hey, Blake, if you sell these 10,000 potato chips, I'm going to give you $1,000 as a bonus. Well, they changed this to where before now I have to figure out how much of that bonus I'm going to have to pay up front before I actually know how much you're going to sell. Well, now if I already gave you the discount, the $1,000, what's your motivation to sell the chips or lower the price? But if your discount, the rebate I pay you, you're motivated by moving the chips to get the discount. You might do chips, buy two, get one free. You might do specials like that. And so what they have data on this, from the implementation of this effective, they looked at since 2018, prices on consumer goods rose 4.4% on average. And this is based on analysis of 3 million products across 30,000 to 50,000 stores.
Because the accounting treatment for discounts changed?
Yes.
Okay, so what was it before?
So what it was before, I would pay you a discount, and you'd be encouraged to sell the chips.
So like you said, you pay me $1,000 to sell X quantity. Yeah.
So now I have to record it now and issue the discount and figure it out up front.
Right. It has to be baked into the price.
Up front and subtract it from the revenue right away. But that's a lot of work. So instead of doing that, I'll just pay you. How about this, Blake? I'm just going to pay you $1,000 to put these chips up on the wall.
Right.
And now you got the money, so you have no motivation to actually sell the chips.
So changing the accounting treatment removed the ability to offer the incentive, which then has increased prices. It's fascinating.
And so this is again, these accounting standards have impact. They actually have real impact. Now, I know you'd say that who's the least standards helping? I don't know.
I haven't met anyone
really
yet who defends it. But all right, David, I got to cover something real quick because we put it in the title here, and that's the fines for big firms. Big firms have been caught cheating again The PCAOB, the Public Company Accounting Oversight Board, has fined Deloitte, PwC, EY, Netherlands member firms for exam misconduct, as reported by Accounting Today. This happened between 2018 and 2022. Hundreds of professionals participated, including partners. They shared answers on mandatory internal training tests, and the total penalties amount to $8.5 million. Deloitte Netherlands, $3 million. PwC Netherlands, $3 million. And EY Netherlands, $2.5 million. So basically cheating on internal training tests that I guess they're required to have in order to monitor and improve their quality control systems as audit firms.
And this fine was from the PCAOB, right?
Yeah, PCAOB. So, we've talked about this before, right? When these fines happen, is like they kind of sound big. So you're like, oh, that's millions of dollars. But then you look at how much these firms make, and over all these years,
they're going to spend $1 billion each on AI over the next 5 years.
Yeah.
What's $5 million here, $8 million here, $2.5 million here? It's nothing.
So
it's absolutely nothing.
The PCAOB has also fined KPMG £690,000, British pounds, in the UK for audit independence violations. Apparently, KPMG was auditing Cars Group, a London-listed agriculture and engineering company, and the firm improperly relied on work from a smaller audit firm that had conflicts of interest. So KPMG didn't realize that they were relying on work. They had subcontracted work to a smaller firm that was in a conflict of interest situation. And I think about these fines and I think, did this really actually impair anyone's independence? Like when you actually look at the rules around audit independence, it'll be something like if anyone on the audit team owns a single share of the company that they're auditing, that's an independence violation. Does that actually make a difference? If I own one share in Coca-Cola and I'm auditing Coca-Cola, do you think that's really going to make a difference into how I, approach the audit? Yeah. There are all these rules around independence that are just so strict, and you get in so much trouble if you violate them. And the PCAOB goes after these firms for these sorts of things, like independence violations. You get fined easily for that. You have to have these complex systems to monitor everybody and how much they own of every stock and who's on what and who's done what. But what are they actually doing to enforce audit quality? They're going after the easy wins, but are they really doing their job if they do this? And I have a story related to that makes me think maybe they aren't doing such a great job. And the headline is PCAOB permanently bars repeat offender. This appeared in Accounting Today as well. The PCAOB permanently barred Michael T. Studer and revoked his firm's registration following severe audit failures related to a 2019 audit of JMU Limited, a China-based public company. This is a public company. And this guy is not ever going to get to audit public companies ever again. And his firm has permanently lost its PCAOB registration.
And what's the name of this firm?
It's Michael Studer, CPA. And I forget the name of the firm. I think it's also got his name in the firm or something like that.
I have a very similar story with a different firm, different name.
Okay.
Continue on.
Well, so his failure was egregious. He failed to do testing on 96% of JMU's reported revenue. He relied on the work of a contractor that he didn't review, ignored basic audit sampling principles, falsely entered work paper sign-offs for auditors who had not actually performed the work, failed to test a $106 million goodwill impairment, didn't supervise the contractor in China, only spoke to the guy one time. And here's the thing, this happened in 2019. So where are we now? 2025. It takes 6 years delay to actually make this happen. And Studer had gotten in trouble before in 2012.
Wow.
The PCAOB sanctioned Studer and his firm for similar violations across 5 issuer audits. The financial penalty in this case was only $20,000. So think about this. From 2012, or perhaps before, until now, a CPA was able to get away with falsifying work paper sign-offs, doing really shoddy work, not testing most of the revenue, the vast majority of the revenue of a public company. And it takes this long to get caught. So what that makes me think is, well, how much of this is going on that we're not finding out about? And, how many other audits did this guy do that were fake and fraudulent? And it makes me think of the BF Borgers story. There's probably a lot of this crap happening. And the PCAOB is focused on fining big firms for cheating on tests and independence violations and not on actually catching the people who are doing fake audits.
But the cheating on exams, I would say, is probably an indicator that you're probably willing to cheat on your audit too and fake your audit. Because they also, I don't know, so they revoked and fined another audit firm. This is a Utah-based accounting firm, Heaton & Co. A firm founder and partner, Christopher Heaton, were fined a combined total of $60,000. So two people together fined only $60,000. And one of their audits, this is what caught my eye. The firm created more than 90% of the work papers almost 2 years after the documentation complete date.
Wow.
And after the PCAOB got involved and started requesting documents, they created the docs. But you're right; it's only $30,000. The fine,
right.
The fines have to be much bigger on this.
So if I was Studer, right? I'm just gonna put myself into his shoes. I probably made a lot of money because I was cutting corners or not doing corners, right? Just circle. I'm just doing a circle here, not even a square. And I'm making a ton of money. And okay, what's the worst that happens? Is now I get to retire and go do something else, or I just can't do audit. I can still do other stuff, and I only pay a fine of what, $20,000? It's ridiculous.
It's just a business expense. It's like a parking ticket, or yeah,
it's just cost of doing business. Okay, and the reason I led with all this stuff is because the PCAOB has been under threat of going away. The Republicans in Congress want to scrap the U.S. audit watchdog and give its responsibilities to the SEC. This was in the big beautiful bill when the House passed it, and it just got stripped out of the Senate version because, man, the PCAOB is lucky. The parliamentarian ruled that it goes against the rules of this type of bill to include the PCAOB provision in it. And that's because this is a budget reconciliation bill, which can only be done once per year and can only relate to budgetary items. And the PCAOB is not funded by federal taxes. It is funded by a separate assessment on public companies, and the PCAOB is a nonprofit that collects that. So I guess that means that they can't put this in the big beautiful bill.
This is why they can't touch Social Security either. It's a separate institution that's self-funded. Yeah.
It's not part of the federal budget. So PCAOB is safe for now, although Republicans are talking about bringing this up as separate legislation. I do think, though, it'll be a lot harder to kill the PCAOB if it's a separate bill, because then, special interests, people who care about this stuff, can speak up and create, a reason not to do it. And I want to say, even though I'm really critical of the PCAOB in its enforcement activities, I don't think that zero enforcement is the answer. So sure, guys like Studer and BF Borgers might go, under the radar for a long time, but PCAOB is paying a lot of attention to the big firms, and they have been hard on them. And I think that's a good thing. We need somebody holding the biggest firms accountable and looking over their shoulder and making sure that we don't have another Enron or a WorldCom. But at the same time, PCAOB could really be doing a much better job of just protecting us against fraudulent auditors. And
yeah,
David,
that's just, there's no excuse for that. It's embarrassing as an industry.
It is.
Everybody else in the industry should be very upset over this.
I suppose medical and legal has this problem too, right? You have bad doctors, you have bad lawyers, right?
That's true.
I feel like
but we're supposed to be above all that. We are the CPAs.
Right. If we want to be better and we want to increase our value, right, that's how you do it. All right, David, that's all the time we have for this week. We've already gone way over. Thank you, everyone who listened to the end. Don't forget, you can earn free continuing professional education for the Accounting Podcast. Go to earmark.app, find our show, take a quick 5-question quiz, and get your CPE certificate. I'll see you around here next week, David. Bye, everyone.